Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, November the 8th, 2018, and this is the Daily Report for Gold and Silver. The Federal Reserve concluded the FOMC meeting today, releasing a statement which in essence kept a steady course, leaving Fed funds rates unchanged. However, dollar strength was firm going into the day and even stronger after the release of the statement, putting substantial pressure on the precious metals markets. Gold is currently trading at $1224.10. That's putting it down about $4.60 on the day. Silver is experiencing a drawdown of almost a full percentage, or a little over, $1441.50. That's the current fixed price. Platinum trading lower on the day by almost $12 at $866.90. And finally, palladium down $11.70 at $11.09. As I said, it has been dollar strength that really has put all of the pressure on the precious metals markets, as you will see when we look at our technical studies and also look at the Kitco Gold Index at the same time. Dollar index up about 0.75%, a 70-point gain at 96.51.5. U.S. equities markets are trading fractionally lower on the day. Dow Jones Industrial Average down about 14 points, 26,167. S&P down about 0.5% on the day, 27.99 and change. And finally, the composite index down about 0.8% at 75.09. Traders, as I said, gold is under pressure today, moderate pressure, currently down a little over $4. Current print $1224.30. The key as I look at it today is two things. First of all, the lower pricing today is completely due to dollar strength, and we'll look at that when we look at a chart of spot gold and the Kitco Gold Index. The second thing that is most noteworthy is the low of today, and that comes in precisely at the 100-day moving average, and then from there it bounced off and then actually up a little bit. To give you an indication of dollar strength, we'll go ahead and pull up a dollar chart and then look at the Kitco Gold Index, but we had a strong move in the dollar, as you can see on this daily candlestick chart, up approximately 0.75%. What could have been a strong area of potential resistance after it broke and closed below the 50% retracement at 95.90 yesterday. It opened with a vengeance today, right above that point, and then traded higher throughout the day itself. Traders, we are looking at a daily candlestick chart of spot gold, currently at $1223 and change, down about $3.10, $3.20. Now, I have just put up the Kitco Gold Index so we can take a look at today's activity and break it down in terms of its components. And what we see is that the decline in pricing is all due to dollar strength, because market participants actually bid up the precious yellow metal by about $3.30, buying gold today. However, once you factor in the dollar strength today, which was significant, you have to subtract $6.50, and that's how we're getting a net change of a decline today of $3.20 while the public was buying gold. The key here is also the fact that when we look at this chart, we are still above the 100-day moving average. That is important to me. And the other thing that's interesting on both this chart as well as the chart of the futures markets is when we compare the 100 and 50-day moving average. Now, although we've seen a decline in gold pricing over the last couple of days, small incremental declines right here, what we are noticing is the shorter term 50-day moving average coming closer to actually crossing above the 100-day, which would be a extremely bullish signal on a technical basis. We do have a stop in place, and we are looking for this market to be able to hold two key areas. The first key area, as we've been talking about, is the 100-day moving average, and the second key area is a Fibonacci retracement area right here, which in the futures market resides at approximately 1217, 1218. And that is the reason our stop is sitting at 1216, 13. Traders, maintain your current long position as well as your stop. Hopefully, we will see this market find support at current pricing and begin to bid itself higher. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Have a great day. Bye-bye.